Now, personally, I'm a pure price person. I take a look at price with the help of Heikin Ashi and take decisions based on the trend, momentum, entry, exit, etc. And for an extended span of time, I've actually overlooked volumes. I never discouraged them, but it never added any significant value to my analysis. But I always liked VWAP, I always liked volume profile than the standard volume columns. But something very interesting happened few months back when TradingView included three new ways of looking at the charts. And out of these three, one of them I find really, really interesting and in the future can turn out to be really useful for me. So join me as I walk you through volume footprint. All right, now this is my usual Heikin Ashi charts with the volume columns, which gives me an absolute understanding of the size of the volumes. And in this video, what I want to focus is if you come to this section wherein you can change the chart type, you will see that I think around few months back, these three were included: volume footprint, time price opportunity, and session volume profile. Now, um, I'm not too sure if they are available to everyone who's using any plan of TradingView. As you would know that I am on the ultimate plan of TradingView. So I'm not aware whether a footprint or a price opportunity is there in other plans or not. My objective intention with this video is to share with you something that I found interesting. You might share your thoughts with me, and then maybe in the future I might, make it a part of my core decision making. So out of these three, I've spent time with mostly all three of them, but it's the volume profile footprint, I'm sorry, which stands out, which is giving me some bit of a better clarity. Now, I have to bring you in line with my thought process, the way I'm looking at charts. So I look at charts with the help of Heikin Ashi, next price and next RSI indicator, and I have a certain logic based on which I look at trend, momentum, and pullback trades. Now, let's say I'm looking at the Nifty futures chart here. Now, let's say I'm looking at these pullbacks, and I would like to go for a long trade or go for a short trade. Currently, all the decision making is coming from price and price only. And I do not want to make any changes to this particular template of mine. The next distant second variable that one can look at after price is definitely volumes. But these vertical columns only tell you the size of the volumes, the amount of volumes that has happened. It doesn't tell you anything more than that. What does this kind of volumes tells you? It's low, so what? It's high, so what? Does it mean that it will go up? Not necessarily, it comes down. And so, going into the intricacies of the volume, going into the details of the volume and volume at price or volume profile tends to be a little more meaningful than just standalone vertical volume columns. And so I thought, let's dive into this. Let's learn this more and try and understand if if at all in the future volumes can become a part of my template, part of my analysis. And so I'm breaking down my chart in two parts. The same instrument, but on the left hand side, I'm going to look at purely volume at price. So I click on the left hand side chart. I maximize this left hand side chart. And now what I have done, I have changed it to volume footprint. This particular video, I'll focus on volume footprint. I'm going to take you into the details of volume footprint as much as possible, as much I have understood. I'll take it slow and steady. So this can land up being a slightly longish video. Stay with me if you're interested. And maybe in some other videos, I'll take up time, price, opportunity, and session volume profile. So when you open your chart and you see it as volume footprint, the default look and feel is this. You will see that particular day's candle, just like any candlestick chart. You will see two vertical pillars on either side of the candle. Left hand side is the sell volume, right hand side is the buy volume. What is a buy volume, sell volume? If someone is buying, someone is selling. So, how can you have buy volume and sell volume? I'll try my best to explain that to you. The total volume, which is over here for the Nifty, is 4.2 million shares, and the delta, which is buy volume minus sell volume. Now, prima facie, for a layman, simple layman, common sense, typical, nothing, detailed. A positive delta is a positive sign. A negative delta is a negative sign. Higher the volumes are better, of course. 7.93 million shares, of course, is more participation than 4.2 million shares and things like that. But does this information really helps me to create a better trading decision? Does it really help me? If the market today went up by a certain point and the volumes were 4.2 million shares and the delta was 387.9 and almost 388, does it really add a lot of value to my analysis or not? And in this entire range, where did how much volumes played out? You can see over here. This is what prima facie volume footprints default settings is trying to tell us. I really don't see any particular value in this, to be honest. And so I will right click on the body of the chart and go to settings. This is where I would like to make some changes as per my personal preference. And as I make these changes, I will walk you through the logic of why I'm making this change. And after making the change, what is the successive reading and what do I make out of this reading? Right? So, first and foremost, starting with this section, which is the body, borders, and wick. Please understand, a footprint chart is anyways colorful. There are scope of adding lots of colors to a footprint chart. And so, I'm not a guy of too much colors, to be honest. I do not want my candles also to be, green and red. So, what the first thing I'm going to do is I'm going to make the body of positive candles white and negative candles black. If you have ever read Steve Nissen or any classic books on candlesticks, the Japanese candlestick charts initially, when it started, they were filled, they were shaded or not shaded, which is white and black. And so I'm going back to the roots of the Japanese candlesticks. Borders, I'm going to shade them black. Wicks, I'm going to make them black. And there you go. You can see at the back of my chart, if it's a white unshaded candle, it was a positive day. And if it's a black, traditional black candle, it was a negative day. By positive day, negative day, I mean candlesticks close vis-a-vis open, not close vis-a-vis close. Right? So I have kept this particular box unchecked. So step number one is more cosmetic, is more aesthetic, nothing to do with volume footprint at all. Now we come to the next segment. The next segment is the volume footprint segment over here. By default, what it is doing, it is taking the 14 period average true range and automatically calculating the row size. Let's spend some time here. You'll notice today, as I'm making this video for you, the Nifty Futures has made 3 rows. The previous day, however, there were 5 rows, and someday 4 rows or 5 rows or even 6, 7 rows. So the number of rows differs, and that's a function of the 14 period Average true range. Of course, the smaller, the shorter the range, the rows will be lesser, and it will be relatively more if the range is wider. Understandable. But why 14? Why not 5? Why not 10? Why not 3? And so it will leave you with some scope, room to make these changes. So let's see what's below that. Auto ATR, it's manual. All right. Let's select manual. The moment I select manual, this becomes ticks per row. Ticks per row. What does ticks per row means? Tick means one move of the particular script. Means it just went up, came down. That's one tick. So in a particular row, how many ticks do you want? If I make it 100, or should I make it 5? Let's see if I make it 5, how does it look? It says error. Okay. So I think this discussion will flow much better because histogram is too large. Please increase row size input. 5 it will not be able to give us. I'll try with 50. Maybe 50 will give us something. But this discussion, because I'm doing it on Nifty, is fine. What it will look to be much better is if we do it on any particular stock chart, then it will look far more cleaner. There you go. Because of course the Nifty's volumes, the sheer size of the ticks is far more. That's why. Now, if I come to manual and if I come to ticks per row, ticks per row. So over here, it will consider minimum 50 ticks on that particular row. Anything less than 50, it will not consider. Okay, if I make it 100, what happens? Let's take a look. 100 ticks. If I take 100 ticks, more ticks are getting inside the row, so the rows will reduce. Please try and understand this with me. This is a day's particular range. So the box over here is telling over here this many volumes had traded on the buy side. But common sense, the candle's low is here. So did any trades happen here? Of course not. What I'm trying to say is if I give lesser number of rows, I will leave out room for these boxes and I will probably not get a very clear, clean picture. So let's say that if we now reduce these ticks per row, and let's say if we make it to, let's say, 10, then you will notice that the number of rows has increased significantly and I have come very close to the highest point and lowest point. So my volume distribution is encompassing, it's kind of covering most of the candles range. Okay. For the time being, let's keep manual, let's keep 10. So these were the candles. It was a negative day. On the right hand side are the buy volumes. On the left hand side are the sell volumes. Please remember, more large cap liquid the stock, you have to have a slightly largish number like a 20, 25 or a 40, 50. And relatively small cap, mid cap or not so liquid stock, a 10 tick size is fine. So for the time being, I will stick to 10. Now I'm going to make some change. This is cluster. On the left hand side, as I said, sell volume. On the right hand side, as I said, buy volume. However, if I want to see it in a profile, just like a volume profile, it gives me a better look and feel. Because now these histograms, these horizontal histograms, have their individual height, which clearly is striking out to me. I can clearly see that the majority of the volumes for this stock happened in this area. And very less volumes happened in this area. In comparison to this look and feel, if you go back to cluster, do you get that visual introspection? Do you actually get that feel visually that which area of this candle actually had the max volume or the least volumes? You don't. So cluster is a no-no for me. Profile, yes, makes sense. So manual, for the time being, okay, 10 and profile. All right, we're making some progress. And then come type. Then in type, we have buy and sell, delta, total, and ladder. Buy and sell is what you can see, buy volumes and sell volumes. Then we have delta. And delta is very interesting because what delta does is just gives you the buy volume minus the sell volume. And so over here we can make some gradient changes. We can clearly see that where let's say the buyers had an edge or a sellers had an edge. This is where both of us have to take a little pause and try and understand what's happening with buy volume and sell volume. You see, if you are using the volume footprint on the daily chart of TradingView, what it will do is it will come down to as small as 1 minute to 60 minute. This is the different types of time frames from where it will try and understand buy volume and sell volume. The more closer to present price you're analyzing, it will take a very granular time frame, 1 minute. But let's say we are looking at XYZ stock and we are trying to understand the footprint of a day which is way past in back there in the past, then it will not be calculating from 1 minute, it will probably be taking 60 minutes, right? So the more accurate, intricate footprint data you will get at the current juncture of any chart with 1 minute data. Now, 1 minute candle, 1 minute data will have an opening price and a closing price. If the close price is greater, if the close is greater than the opening price, then on that particular bar, it will consider that to be the buy volume. It will consider that close is greater than the open. So the buy volume, it will go towards the buy volume. And similarly, if the close is less than the open, it opens and it falls and it closes, then that will get attributed to the sell volume side. If the open and close are the same for that particular 1 minute, then it will consider the close vis-a-vis the previous day's close or previous 1 minute's close. Right? So that way it will try and calculate the buy volume and the sell volume. One website of TradingView which I found really useful, I'll show it to you, is this page, which I have read. This video, however, I did not find it to be that useful. This is the link to that volume footprint charts, a complete guide within TradingView. I'll share this link in the description box. I've gone through it. I've liked the written part of it. As I said, the video doesn't do any justice, to be honest. And as you scroll down, you will see this is what I'm explaining to you, the volume categorization. Now, with that thought process, when we come back to the charts, so we are looking at Reliance Industries with the volume footprint, and these are the delta. So at this price today, it's a red bar, it's a minus number we can see. So at this price, the sell volume was greater than buy volume. That's what the information is telling me. Apart from delta, there's total. Total will just give you the wherein what volumes happened. Over here, this many volumes happened. Over here, the max volume happened, which will be the point of control, and so on and so forth. And then you will have the ladder. I have not looked too much into the ladder, but I personally found delta to be very useful. With delta, I'm going to change these gradients. Okay. And they're fine more or less with me, but I'm going to just make them a little to my preference, wherein I'll start with the least, the lightest, let's say red and green, and then move on the ladder and give it a darker shade. So I know that today, in this particular day, this is where the maximum positive delta and this is where the maximum negative delta. Net you can see, as if I zoom in, today some total 14 million shares traded, uh, 7.56 on the buy side, 7.32 on the sell side. So 246 kind of delta on the positive. Because of these two big positive deltas, it is counterbalancing this big negative delta. So far so good, fine. Now, at this point, Does it really add any edge to my analysis, the way I look into it? Well, not really. Till this point, not really. I'm just getting a feel of what has happened where in terms of volume. I'm getting a feel. I can mark this level where the maximum volumes have had happened and all that. That's okay. But it's not giving me any edge till this point. Okay. Now, this is one issue that I found with footprint charts, that when you zoom in, depending on what settings you have, it becomes very difficult to kind of read it um, clearly, cleanly. So you have to play with the vertical axis and all that I'm doing right now. Let's move on. Unfinished auction, if you click on it, unfinished auction is essentially a price point where there were buyers standing or sellers standing and not much trade really happened. If you click on it, it might shade some areas in that default colors where you will find barely, there you go. And most of all of them I feel are at the highest and the lowest point, where there were some sellers waiting but trade never happened, or some buyers waiting and buy never. I'm not using it, does not add any immediate value to it. Now let's talk about some value area and imbalance. This is where things gets really interesting. Value area 70% is in line with the volume profile concept. That is, over here you can see VAH and VAL, value area high, value area low. 70% means of today's entire volume, 70% happened in this area. You can make it 50%, you can make it 30%, 100%. It's up to you. If you make it 100%, entire thing will get shaded. That is, VAH will be at the top, VAL will be at the bottom. Doesn't make sense. 70% is fine, which means that maximum today's volume happened here. Majority of previous days volumes happened here, etc., etc. Now, in between the value area will be POC, which will be the point of control, the max volume of the day. This I have kept it in black, depending on whatever color you choose. Now you will ask me, or you will be curious, why is this black so small? If it is point of control, the max volume of that particular day at that price, shouldn't it be the longest? Yes, but please remember, we are looking at delta. We are not looking at total. The moment you go to total, your black will always be the longest. We are looking at buy volume minus sell volume. So I leave it to you. You can look at total also. Total gives you a sense, but total doesn't give you the pull and push, right? So it's a choice depending on you. I will go back to delta, and I will know that this is where the maximum point of control, the maximum volumes that happened. And if I can see this, I can just remove it just to see whether that point of control was a red point of control or a green point of control. It was a marginal red point of control, nothing significant. One thing that I have found useful, if you find it difficult to, you know, zoom in, zoom out in a volume footprint chart, is always increase the ticks per row, because increasing the ticks per row will make the rows wider, and it will give you the candle, this box, and zooming in, zooming out will be relatively better depending on which stock you are using. I, however, prefer manual around 10 because it covers the highest point as well as the lowest point of every candle. I like this. Below that is show summary info, which is that box that you saw, or the table. You can click on it. The data information will come down here. It's your choice. I'll keep the data as a table down here, which will give me total volumes, and I think delta. And if you give it, so you can choose what information you want, volume change, a lot of information that you can want. You can give it info box, but info box will only pop up depending on the scaling. So as I said, if you make it 10 to 25 or 30, the info box will come below the candle. There you go. If you reduce it, it will not come. So it's like that. Going back to my usual 10, let's make it 15 for this particular chart and see how it looks. Not bad. Okay. Now, the imbalance part. Check over here, imbalance 300% highlighting. And this is where you have to pay a little bit of attention. What is it trying to say? Imbalance means on one side is skewed in relation to the previous side. Too much buying or too much selling. What is the definition of this too much in percentage terms? 300% higher. Again, you can make it 200%, 100% is up to you. 300% is fine. 300% higher to what? There has to be some base. You have to be 300% higher to what? You will not be able to understand this from the delta. To understand this, I have to take you back to buy and sell. The moment you come to buy and sell, and this is where I will be able to explain this to you easily. Yeah, this is better. Now you can see it very clear and clean. The only thing is I have to drag the vertical scale and fix it all the time. You see over here, the highlighting is done in greens and reds. So let's say I give it this green and I give it, okay, this red is fine. You can see over here, I have a highlighted red, and over here, I have few highlighted greens. Can you see it? There is an imbalance. So at this price, there was an imbalance of selling, which was 300% higher to something. What is that something? For the sell side imbalance, this number has to be 300 times higher than its previous higher row. So 324 is more than 300% of 105, not 243, not of the same row, one row higher. And similarly, 289, 268 is 300% higher than one row lower. So at this price, whatever volumes got traded, on the buy side, more than 300% of the previous row side got traded, and that's why the imbalance. So the moment you have these imbalances, you know that some good quality volumes are happening compared to its lower price or higher price. Okay, number one. Okay, now below that, I have stacked levels. Now, this will be the last point of this video, but if I click on it, what will it do? What change will happen to my chart? The moment you click on it, some range gets shaded in greens and reds, and it will immediately give you a feel of some buy zone or sell zone. See this? Now, this stacked levels is in line with imbalance. This is the theme. I hope you understood imbalance. If there are three successive imbalance of greens or reds, market. That this is what it is trying to tell us. So with that thought, if I zoom in, if I okay this chart, and if I zoom in, the moment there are more than three imbalances, so if I focus on the current candle, there you go. As we were looking at it, there were more than three. There were one, two, three, four positive imbalances, and so it has got shaded. We can consider this as a support for tomorrow's trade or the next days. As I roll back, I will observe these shaded reds and greens. Please understand, we have to make use of this understanding not standalone, but in line with that particular day's range. If the market fell big time that day, lot of negative imbalances, of course, will form. If I right click and go to settings, if I go back to my delta, keeping the 300% and the three imbalances, you can make it two. If you make it two, you will get more. If you make 3, 4, 5, you will get less zones. So I think what I'm using is two, back to back two zones of 300%. That's what I'm looking at. And this is essentially how I am making, at least I've made some progress with the footprint alongside price chart. This is what I'm trying to look at. End of the day, when the market ends, let's say Nifty futures, and we had a 366 points, 1.5% rally, My price analysis is done. Then I would take a look at it and come down here and take a look what happened to that particular day's volume footprint. Um, as we zoom in, hopefully we will be able to see this very clearly. Now, Nifty, as you can see very distinctly, can you see the difference that when you're in an index, because the large number of volumes, this 15 will not do justice. It has to be like much more. Maybe a 50 probably will give us, because the ticks are so many. Nifty gets traded significantly. And so you can see, you can make out the difference that the more rows you make it, it will make sense. So from this point of view, of course, you can go to an ATR based, but this is where a 14 period ATR and that logic comes into play. And I don't get the granular feel. You see, a 14 does not give me the granular feel. I've come back to this point again just to make you understand that 14 ATR does not give me that feeling. I can probably go down to, let's say, if I go to 2 period ATR, then it will be much more granular than a 14 period. Well, not really in this case. And so it has to be manual. I like it manual. It's just that you have to adjust it a little bit depending on what stock you're looking at. So 150. This is Nifty. Um, a pretty decent volumes happened right on the top in terms of imbalance, and maximum delta is over here. Maximum volumes happened here. This you have to keep in mind. So play around with delta or buy and sell. That is your call. I think between buy and sell and delta, these two makes the maximum sense. These two look and feel. The good thing about buy and sell is stacked on both the sides, so you get a feel of it. Of course, the point of control is very simple to understand. And this is it. Now, I end this video by sharing with you one thing that I've started looking at, and it might add some value to both our analysis. That is um, delta divergence. For example, again, I will go back to some stock chart and it will make a little bit of sense. Just randomly, I'm just clicking on, let's say we go back to Reliance. We were looking at Reliance some time back. As the chart is taking a little bit of time, I'll just share this with you verbally. The delta divergence is essentially, let's say the chart is falling, the stock is falling, but the delta might be negative or positive. If there's a negative delta, it's a falling market and delta is negative, makes sense. It's a bearish market. But if the delta in itself is reducing, or if it's a falling market and the delta is positive, it does not tell you that selling has finished. It just tells you that, hey, listen, take a look at it. Delta is not negative. Now, again, this is a problem because I will go back to my settings and I will go back to 10 or maybe 2025 because that will give me a much better looking volume footprint than 150 because it depends on the tick size. I hope you understand. So, the point that I was trying to make over here is take a look at whether the market is, let's say, in this chart. When this chart was coming down, what was the delta of these days? So we will go to settings. We can make it info box or we can make it a table. So you can see the delta. Delta is positive or negative. It's green or red. And so as it fell, it was negative. It was positive. It fell, but it went bounced back from the days. You can see at the bottom how many imbalances happened. Next day was a gap up that could not sustain. It was negative, it was positive, it was negative. Now all this while, as the stock was trying to bounce back, it did not have any positive delta. Just don't go for positive delta or negative delta. Please check how much delta is changing. That's also important. So that's the footprint as of now. I'll be honest with you, I do not have any significant strong edge out of it right now. But one thing that I have really found out useful is the imbalances. For the next, support resistance from a short term point of view plays a good role. And it gives you a sense of how prices played out that particular day. End of whatever discussion I do, everything falls back on price. If price decides to move and give us a breakout, no matter what delta negative it was, it will not care and it will give us that much needed breakout. So I've not come to a core strong conclusion of volume footprint, but the more I look into it, the more I evaluate it, maybe with time and experience, I will probably find some edge. If I don't find, it's still all right because my edge is price action and not necessarily volume footprint. I know this video landed up to be a little longish. I did warn you about this, but do share your thoughts about volume footprint. If you're using it, how are you using it? What are your thoughts about it? It'll always be nice to hear from you. Thank you. Take care of yourselves, and goodbye.